Hello all. So today we are going to discuss about the call option and put option. So in that very particularly how to select a strike price. That is, everybody is having a doubt that there is a in case of call option, what is mean by at the money, what is mean by in the money, what is mean by out of money. So these three is very crucial when you enter into market. For example, I will explain this concept in real chart in zero that. So before that, a basic understanding about the call option and put option, the comparison. For example, market is closed nearby 24,000 strike price. So for that call option, generally call option is known as CE, put option is known as PE for execution. So for 24,000 call option, for this, for both call option and put option, this is the strike price. But how it is different for the in the money call option and in the money put option, out of the money call option and out of the money put option. So how it is different for the same strike price for call option and put option. For example, first I'll explain through call option. So call option means, as I told you, that is CE at the money. For 24,000 CE call option, the in the money call option is 23,800. It may be around 23,900, 950, because Nifty, it is that 50 points you can easily buy the strike price. But in case of Bank Nifty, you have to buy at the strike price of 100 counts here. So for easy understanding, I given 24,000 strike price. For the 24,000 strike price, the in the money strike price per call option is 23,800. Similarly, for this strike price, the put option out of the money, it may be around 24,050, 24,100, 24,150, 24,200. Above the strike price is known as out of the money in case of call option. Below the strike price, that is at the money strike price, is known as in the money strike price. Similarly, for call option, put option, at the money is same. 24,000 is a strike price for at the money for both call option and put option, but it is totally opposite for in the money and out of the money. So here we told that 23,800 is a in the money, but it is opposite for that put option. In the out of the money is known as 23,800. It is not only 23,800, it is 23,950 is a out of the money, and 23,900, 23,850, 20,800 all are out of the money for put at the money strike price. So here 24,200 for call option, this is out of the money, but it's totally opposite. Put in the money strike price is 24,050, 24,100, 24,150, 24,200, 24,300. Anything above the strike price is known as in the money. So this is the simple difference between the call option strike price at the money, in the money, out of the money for put option and call option. So this is a basic understanding when you are entering into any call option, put option in real market. I will explain through in chart how you can easily can understand the real market. For example, market is today closed at what price? And 13th April, it's around 23,842. So for this 23,842, you have to select that no strike price. So once you select this Nifty, immediately this chart will open. In that second option is option chain. Once you click the option chain, there are n number of strike price will be open. For 21st April, the strike price is for it is close around 23,842, right? So there it is. Strike price is here. You can see the black. It is given in the black in the center. That is 23,850. So this is the 23,850 for both call option and put option strike price. So once you identify this is the nearest strike price for market close around 23,842, you need to take the strike price, whether it is, for example, if I am having money, I want to play in a safer side, means you have to always go for, if the market is high, going uptrend means, for this 23,850 ka, uh, in the money is 23,800, out of the money is 23,900 for call option. Similarly, if you go for market is going down, I want to select a in the money, out of the money means, for the same thing it is opposite. For 23,850 ka, in the money strike price is 23,900, out of the money strike price is 23,800. So this is the basic simple way of understanding the call option, put option. In that call option, put option, in the money, out of the money, at the money. At the money means the strike price which is near to the market is closing. For example, 23,842 means the nearest uh, strike price is 23,850. So we identified that what is the at the money price. So we need to select that based on our risk taking ability. I want to play safe means, safe means you have to select at the money or in the money. So the intrinsic value for out of the money is very less, and it is a highly risk. If you take a risk, if you predict the market, then it is a reward. Unless otherwise, how you're giving the reward also, same time it is that you are that losing the money when it's come down. So this is the typical difference between the option chain. So you may think that no, option chain I can only see this in Zerodha. No, everywhere, even in Upstock is there, Grow is there, everywhere you can see the option strike price, and the money is know that how much it is needed for each and every strike price also it is given. Once you select here buy option, you'll get that know how much money is needed, 19,305. For example, for this CE, I'm going for out of the money 23,900 means that strike price will be, as of now at the money it is around 90,000, 19,305. For out of the money, if you buy means, you can see that no, only 17,000 you needed. So that is the difference between that at the money, out of the money. In case of in the money, for the 23,850, in the money is 23,800. So 23,800 is a strike price. So if you select this in the money call option, so you need 21,000. So you're seeing that if I select the 23,850 means the money is only 19,300, and if I select that out of the money, I need only 17,500. And if I select in the money, it is more than the at the money price. So that is the difference between in the money, at the money, out of the money. For example, for quick, if you want to buy immediately, this is a thing. If you want to regular, so there are two things. One is intraday, another one is overnight. So overnight means you are carry forward. You are not closing the call option or put option what you entered tonight. You are going to carry forward tomorrow, because what you expected today is not in your way. For example, I am aiming for 1 is to 1.3 or maybe 1.5. Suddenly the market is not moving in your way. So you have to wait for tomorrow. You're predicting that market may go up. So I can carry forward. If you want to carry forward, again you select here. So if you buy one lot of Nifty, for example, today market is closed, so that's why it's not entering. So if you enter here, the money is needed is around 21,000. Similarly, if you go for intraday, if you same intraday, see overnight, if you are going for means here intraday means it will be closed within 9:15 to 3:25. You can execute order only between 9:25 to 9:15 to 3:25. The automatically, whether you are closing or not, in intraday, if you select means, it will automatically close 3:25 p.m. So be careful when you are entering, whether you are selecting overnight or maybe intraday. Intraday means time period between 9:15 to 3:25. Overnight means you are buying in the any time between 9:15 to the whole day, and it is carry forward to next day. So that is there. When you're entering, you just know that enter with the limit. So putting the limit that no, when the market is come to 325, 323, you buy, and target price is no, you can also with enter of stop loss higher than the what if, for example, I'm just predicting that no market will go up to 350. So I can go for 350. So this is the way to enter uh, uh, enter in the market with point and with a stop loss, and stop loss with market means also it's available. For example, 350 you can enter. So this is the simple way of executing the market with the intraday or maybe overnight with a particular uh, strike rate, whether it is at the money or in the money or out of the money. It depends of your risk taking nature. But Nifty in immediately after the expiry, the charges will be more. So that's why you can go for out of the money or at the money. But most importantly, when it is market near to Friday or maybe Monday, Tuesday, you can only go for in the money. So if it is out of money, the intrinsic value is that very high. So it will be risk also more. When it is give reward, also give more reward. Then risk also more risk, because the money will be that going like anything. So the candles will be moved forward. So that is the main issue in strike price, especially at the money, in the money, out of the money. So once you selected, you executed the trade. Sir, I have no idea about what is the basics about these fundamentals of how to keep whether market is going up or not. So once you select the chart, there will be different, the chart will be there like a trading view. It will give you a lot of that chart how you can predict the market. It's basically moving average and the stochastic and super trend you can go for. But here it is, sir, I have no idea about all those things. Can you explain me in a simple way? Is it possible for predict the market by default? Yes. So there is a third option called fundamentals. When you click the fundamentals, that chart will give you market how it is going on today, and it will give that from the 1 year. We just change into technical. Once you change into technical, you see that how the chart is visible. So by default, it is giving 1 hour. You want to do a scalping for 1 minute. So here you can see that the basic ideology here it is the cross between 5 MA and 20 MA. Whenever it is bearish means market is coming down. And for example, sir, that I'm not that much scalper. Can you give me in 5 minutes? Yes. 5 minutes, if you click means here you can see that 5 EMA, 20 EMA crossover is negative. So it is giving a bearish symbol. So out of that Nifty indices, 18 that symbol shows that bearish symbol, and 2 only bullish and 7 is neutral. So the more number of pressure here it is, so you can aram say enter the levels. And here it is, they not only given that trend, and you can see the important levels also it's marked here. So these levels are highly like a support and resistance. So along with this short term that 5 and 20 EMA crossover, you can predict the market whether it is going up or down. And my kind of advice, always you enter with stop loss. So stop loss, you can save your money even if it is market is not going in your way. With minimum loss, you can come out. Unless otherwise, it's very difficult. My kind of advice, you can go for either 5 minutes and 10 minutes time frame. And the EMA crossover 5 and 20 is the shortest period. If you go for carry forward for the next day, or that keep it for a month, you can go for the higher time frame. So we discuss about that how the market is for Nifty. Can I? This is same for in case of the stock also. In case of stock, Reliance that April future, for example, Nifty and Sensex, it is weekly expiry. But in case of stock and bank and FinNifty and Midcap, it is monthly expiry. When I'm seeing that monthly Reliance April today, this month is April future, and market is close around 13,1319. So for that, I need to select the strike price. So nearest strike price for this 1319 is Reliance 13,000 1320 CEP. This is the at the money. So we need to select that the option chain for this one. You will see that how this option chain for 13118. So here you can see that once you click it is the option chain will come. Once you click the option chain, for example, market is close around 1319. So the nearest at the money is 1320. In case of the for call option, this is the 1320. I want to select a call option. At the money means it is 1320. For that in the money means 1310. Out of the money means 1330. Similarly, if I want market may go down means for at the money put option is 1320. In case of in the money put option is 1330. Out of the money put option is 1310. So this is very simple. Call option, what is the in the money? It's for out of the money. For put option, for call option in the money, opposite to put option out of the money. That is a very simple, and you can select when you enter in the market. If you don't know anything about technical knowledge about indicators, you just go for just the fundamentals. There you can get the information how to predict the market. For example, Reliance also, here you can see that now how the fundamentals analysis is given. So in here clicking the technicals. So once you click the technical, it will give you the chart value. See how exactly the market is moving. It's a macro level, 1 hour time frame. I can modify into 1 minute, 5 minute. So 5 minute and 10 minute and 15 minutes is that very good. So here you can see that now bearish symbol, and out of that 20 symbol 20 nearly 20 symbols given, averages the technical analysis given negative, that is bearish. So automatically market is right now in a bearish side. So this is the way to understand the market. So every day I'm that giving this type of strategies at the time of around 10 p.m. every day. So you can see these videos which is available in every day. So for example, this is yesterday's video, and this is the day before yesterday. These are all the basic video for understand the stock market. So you can read, and if you have any doubt, give me in the comment section. So where exactly you are facing the problem, and please follow and subscribe. So this is a basic analysis of how during my the 10 years of experience, I just modify into very simple way. So further that if you need, for example, beginners, there will be problem of understanding the chart itself, how to open the demat account, understanding about what is maybe call option, put option, everything will be doubt. So if you ask where exactly what is the problem you're facing when you enter into market, that only I will give a suggestion for to create next video. So please know that follow and subscribe. So you like this video and share with your friends. So my the YouTube channel is ACP Alpha Indicator. Thank you.